This is our video blog for March 21st, 2011, and like most days you really want to find the currencies most weak and trade those against the ones that are most strong. You can see going into today the dollar had real-time weakness and the daily, weekly, monthly trends down. The yen also had a daily and weekly trend down. The monthly was just slightly up. It also had weakness today. The euro is the strongest of all the pairs with the daily, weekly, and monthly trend up. Last night or Sunday, it didn't really have any real-time strength, so you really wouldn't have wanted to trade that pair. The Australian, on the other hand, did have a lot of strength. The daily and the weekly is slightly up. The monthly is still pretty weak, but this, because the Australian was down so much, it's entirely possible, and you can see it happened today, that a currency can go up, for many, many hours on a counter trend against a longer-term monthly trend that's down. So let's start with that one. Weak dollar, strong Australian, and that's a good sign of a likely uptrend. And you can see even starting Sunday, price was above the hourly. It's more likely to go up when it's above the hourly, more likely to go down when it's below. You can see this is Friday's high, came up to it, pulled back again, and if you wanted to buy this breakout, this is a very high probability trade because the market found support at the hourly, rallied up, keeps making higher highs. Didn't take this high out yet, but it also hit that resistance area. If the trend was going to be over, most of the time it would have pulled back at least to the hourly or even continued down. This one didn't. It went sideways there for half an hour. This is a nice little sideways rectangle pattern breakout. You get in here, here's your first profit target, here's your second, and in this instance the market took off and went right up to our Fibonacci area, which is a great place to get out of the trade. Normally you want to get out of the trade here, and it also went sideways for another hour and a half and broke out. Decent trade to get in. Here's your next profit target, and up here is your next one. Kind of went sideways up here. I probably would have got out of my trade there because there wasn't a whole lot of real-time incredible momentum earlier today, but great trade here, pretty decent 25 to 35 pip trade there as well. Same exact trade with the yen. Very weak yen, strong Australian last night. The Australian was one of the strongest pairs, and you can see going into Sunday the price was underneath the hourly, so when it breaks from underneath to above it, you really want to be a little cautious. So I wouldn't have necessarily bought there, but when it pulled back and it made a higher low than here, an uptrend is a series of higher highs and higher lows. It's very easy to see on the chart that pattern. You can see the momentum to the upside had more momentum than the downside, and when it went back to the hourly and broke out right here, great place to get in. This is a good profit target to get out because the market kind of went sideways there, and once it broke out over that level, 81.04, another good place to get in because the Australian was one of the strongest pairs, the yen was weak, and here is Friday's high, which makes a great profit target. It's 40 pips away, so anytime you can take a trade where you might lose 7 to 15 pips max if you're wrong, but the next profit target's 40 pips, and you're trading one of the strongest momentum pairs, give it a shot. I wouldn't shoot for a super high profit target because the monthly trend of this pair is down, and in fact when it went to the Fibonacci area right here, it was also a fib profit target off this last wave. You might have even looked to get into a counter trend trade here. Right here it had incredible momentum, but when it double topped here about an hour later, there was no strength and the monthly trend is down. This had really rallied up nicely, kind of went sideways, rallied up, went sideways, rallied up. It's kind of the third wave. I find with my own trading, looking for counter trend trades after 3 or 4 waves in one direction to be a pretty good method for me, especially when it's in the direction of the weekly and monthly. Now in this case the weekly trend was up, but the monthly trend was still pretty weak. A strong move over even 8 hours to 2 days can change the weekly trend up, but it never usually changes the monthly trend to up. So the monthly trend was still down. This rallied up again, and then went right to a fib level, major resistance right near the upper containment bands, and you had a nice little double top with divergence. Very good counter trend trade, and previous day's high is a good profit target. It's about 35 pips away. You're risking 6 or 7 pips. If the trade worked, you'll make in this case you did about 35 pips, 30 to 35 pips. Another trade that was also good, trading with the trend, as you can see, explosive momentum here. It pulled back, nice little 25 pip pullback. On a tick chart you would have bought this little pullback here. You might have got out of this trade when it went sideways here for half an hour, and then when it broke out again, another good place to get into the trade. Now, you didn't know that it was going to stop here. If it had continued up, you would have stayed with it longer. But even if you didn't take this counter trend trade, when you notice the monthly trend's down, it had gone up, 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 double top there with less strength. Pretty decent place to exit your trade, even if you didn't do the counter trend trade. Now the pound today was, for the most part, stronger than the euro, and at 3 o'clock you can see some strength coming in here. So the pound yen and pound dollar were both good ones to be buying today. Now this one opened up Sunday, and most of this morning went absolutely sideways. Did nothing. Anytime you see that, breakouts of very long 3 to 5 hours or 8 hours or 10 hours rectangle patterns. In this case, the volatility was high, and it really got small starting after the midnight session today. And when it broke out, here's your first profit target, here's your next, and there's a lot of really high resistance areas up here. Various moving averages, 200-day, 20. It looks like the 50-day moving average. So you don't know which of these areas is likely to stall price, but one of them is very likely to stall price. If you bought that breakout, came up here, you might have gone out, bought this first pullback and went sideways. And I'm not sure if I would have taken this trade, even though it did work, because it could have very easily stalled there at 132.01. If you bought this at 88, you only have a likely 12 pip profit target, and you're going to risk 10 pips. You never want to take a trade that is likely to give you only about the same amount as you risk. If you risk 10 pips, you shouldn't take a trade that has a potential 10 pip profit target, because you can't count on it going through there. You never know in real time what the market's going to do. In this case, it went up about 20, 25 pips, 30 pips. So it turned out it would have been a good trade, but you didn't know that. And for that reason, I wouldn't have taken that sideways rectangle pattern here. But once it found resistance up here and pulled back, this is a pretty decent 40 or 45 pip pullback off of there. The trend was up. Buying this pullback right here is a good deal, because this resistance area, once broken, usually it's going to get broken the next time. A resistance area once broken is not as likely to come into play later in the day. So buying this pullback here, you can ignore that one, and the profit target up here is the right near the high is the likely profit target. If you get in here at 89, it's likely to go up to 21. That's 30 pips. You're risking 10 or 12 pips to make potential of 30, and if it took the high out here, could have won another 50. You never know. So let's look at the pound dollar now. This one, also kind of went sideways, and you have a multi-hour trend line here that got broken. It didn't quite hit, all those areas right there, and it also found support at the hourly moving average. Anytime a currency trends up, usually the first time the hourly gets hit, and as long as the price doesn't break underneath it, it's very likely to continue that trend. This one kind of went sideways there for an hour, hour and a half, and when it broke out, very high probability place to get in. Here's your first profit target at 46. So you can see that's 30 pips away. You're risking 7 to 12 pips here with a good potential of making 30 pips. In that case, the market went sideways there so long, I would have got out of the trade somewhere up here at 62.40 to 44. And it went sideways long enough that if it broke out over that high, it's very likely to go up to the next profit target, which is up here, and that's exactly what it did. It's about 35 pips away while risking 10 or 15 pips. And once it broke out, came back down, you would want to move your stop from here, underneath here, and it kind of went sideways for an hour and a half. You also have a nice little wedge pattern. If you hadn't got into this trade when it went sideways here and broke out, you might have bought this level here. And you can see the exact same thing happened. Went up to the monthly pivot level, and there wasn't extreme momentum here like there was in the pound yen. And you can see all but losing all of its strength here at the double top. So good place to get out of that trade. Today was a pretty dull day. There was some good pound yen trades. Now the CAD, the weekly and monthly trend's down. The daily trend is very strong. It was extremely strong today. So the dollar CAD, weak dollar, strong CAD. The CAD was one of the stronger pairs, and it just basically trended down all day. You can see on Sunday when it opened, it was above the hourly, and daily, weekly, monthly trend on this particular pair is down because the CAD is stronger than the weak or weaker dollar. So when it broke down underneath these lows, good place to go short. Market came down to Friday's low, and it found support there. You might have got out of your trade, and then when it broke down again here, this is a very high probability trade. Anytime a currency is trending down, the daily, weekly, monthly trends down, it finds a support area where you don't get any kind of significant bounce. And what I mean by that is any support level where it doesn't even retrace 38%. This would be a 38% retracement. There's no buying down there basically. So once that area, there's buying enough to stop the price from going down, but once that level gets broken, everyone who bought here has to cover. And anyone who did buy there is pretty nervous because you would have expected it to go up to the 38 to 50% retracement, the monthly pivot level, or even the hourly moving average before continuing that trend. And it got no bounce whatsoever. Anytime a currency goes down, goes sideways with no movement up, it's a very high probability trade, and you can see it just absolutely collapsed. Here's the lower containment band. When it gets underneath the lower containment band, it's always risky to sell down there, but you're in this trade up here around 9,800, 9,805, and it just fell like a rock. So when it double bottomed right there with less weakness than before, you're out of your trade somewhere down at 50, so you made about 50 pips on that trade. Excellent, high probability trade in about 2 hours.